world? What's going on, guys? We'll get started here in just a second or two. Take a peep at something. All right, there we go. But what's going on, guys? I'm sure some more. Everyone's probably getting pinged a little delayed. But what an interesting day, I gotta say. On the back end of last week, little debacle, we kind of had this kind of foreseen in terms of this market price action right now. And I think Avery kind of did an amazing job last week, just kind of preparing all of us for this kind of little dump here. I think he pretty much talked about us going down 418, I think down towards 407, which kind of allows with pretty much aligns with my target, my range that I'm looking at for whether this ends up presenting itself as a true buy the dip opportunity or do we see a continuation of just what has been a full on meltdown. So that's pretty much what it was. I don't know if anyone probably noticed out of my newsletter in particular is that I kind of stayed away from tech, and I kind of obviously you just knew that off of pretty much last week's guide that you knew that tech was obviously going to go down, and you could see pretty much the entire broader market just dragging down with it. I think I saw Netflix down earlier on; it was down about $12. I think at one point in the day it was down 15. We start to see Apple starting to roll over pretty aggressively. Of course, we do have Nvidia's earnings that are coming up here in 2 days or so, the 24th. That is, that's going to be something to see if Nvidia has any kind of snapback, if it shows any kind of relative strength here before its earnings are due on that 24th. And then also with Tesla split also coming up here also on the 24th, do we see any kind of rebound out of that? Now looking at the day that Tesla had, I could probably say that Tesla definitely should have been down at least $50 in this kind of environment, especially. That should have been down easily $50 on a particular day, like how we melted as much as we did. I wouldn't have been surprised if we melted nor closer to $100. But that was pretty much some relative strength. I think that was holding it up for most of the day, if not all of it. So that's something to pretty much keep in mind. I did kind of give a little bit of a TikTok video that kind of just went out earlier this morning, and it was pretty much aligns with the same things that kind of caught my attention earlier on. We saw the 10-year bond yield kind of get right back over that 3% mark. We saw the dollar continuing to rise towards its highest mark yet. We saw pretty much there's natural gas prices were pretty much also at I want to say all-time highs since 2008. So everything just pretty much hitting its peaks, continuing to just drag up, and that kind of just smelled blood for the market, and there was no letting it up once we started to just roll over. All right. So that's pretty much just hindsight of what I was looking at. Going back to my newsletter plays, obviously you didn't see anything pretty much tech related from my part. I kind of went with the more of the safer plays. I kind of felt like one, obviously lows. If the market was gonna die, that head and shoulders was pretty much significant there. And then I was also just basically looking at CF, which that actually had a beautiful breakout today. All right, what's going on, PW? Haven't seen you in a while, PW. What's going on, my guy? So again, let's kind of get right into SPY, and then there's not too much to look at in terms of tickers, if I'm gonna be honest. Obviously, if the market's gonna drag down again tomorrow, which I would pretty much personally anticipate it is, there's not so much that you can say in terms of levels, unless you're looking at marquee levels that are more so off of the daily. All right. But looking at SPY, I'm pretty much looking at this little golden zone, and this is where I was pretty much piggybacking off of where I want to say is a quote unquote buy the dip opportunity. I have a nice little anchor view up sitting right at this 407 half spot, and that could pretty much overextend us to the downside here out towards 405 if we really do extend. So that's the zone I'm looking at. It's between this 405 to 407. That's more so the golden zone that I want to see if we can end up holding, and then we get the strong reversal back to the upside here. Whether that be on the back end of Tesla split, on the back end of Nvidia, pretty much causing that kind of trigger, that's what's going to be more so, more telling. But that's what I'm going to be looking for, 405 to 407. That's what I'm going to look to pretty much, particularly look to add to maybe a potential buy the dip opportunity type scenario. All right. So that's what I'm looking at. Otherwise, if we can snap back, we're obviously going to look to pretty much take out this resistance here at this 407 half, well, 417 half that is. And that's what we're going to be looking at for a reversal if we can get any kind of meaningful bounce here going into tomorrow. All right. One quick second. Just do something real quick. What in the world? All right, there we go. I got it. So again, I'm gonna be looking to see if we can reclaim over 417 half. That's the mark where it's gonna be more storytelling to me. If we can pretty much show any kind of strength and bounce back off of today's price action and get any kind of meaningful retracement. Otherwise, if we can't retrace again, we're gonna look to take out the lows from today, and then we end up sinking down to that 407 and 405 spot. All right. Other than that, again, I said there's not too much to pretty much keep an eye on. This Tesla chart, even though no, I'm saying that it's likely showing some relative strength out of today's price action, we may not end up seeing it get that meaningful bounce, as I think a lot of everyone, if more so, is pretty much trying to buy it up, expecting a meaningful single day rally out of Tesla before it's split. So that pretty much leaves us with what, about 2 days here that we have tomorrow and Wednesday before we end up seeing that split take place. So, you have to imagine that everyone's pretty much trying to buy the quote unquote dip on Tesla. Now, what concerns me about this is that you basically have a nice little double top action. You can see the left top, you see the right top, and you're particularly supposed to take this leg down and cross that neckline, which is pretty much sitting right at that 852 spot. So if this rolls under 852, this is where it's going to likely end up getting ugly before we see any kind of meaningful reversal. So 852 is going to be that spot that I'm going to watch for tomorrow. I'll wait for it to pretty much test that level. More so, likely we end up testing it maybe even pre-market. But we crack below 852, you're looking to basically take out wick low of that neckline here at that 838. And I have that coming down towards 825. All right. So that's what I'm looking at. Otherwise, 825, that's where we could particularly look to see a reversal. Just depends how quickly we get to 825. If we get there likely tomorrow, then we could probably see the snapback on Wednesday, right in time pretty much for that last minute rally for that split. All right. So again, those two key levels, 852, 825, those are going to be the two key levels that I pretty much watch for basically my breakdown and then my reversal. All right. Outside of that, we already saw Apple pretty much starting to roll over. I think Apple's been pretty much spearheading this entire downside. If you want to say it led it all the way up, and it's likely going to end up leading it down as well. So that was pretty much a key breakdown. Now, the one thing, of course, obviously with SPY gap fill, and I think everyone's been looking at that gap fill that we're just sitting in right now on SPY. You have a nice gap fill here below on Apple, sitting right below this 166.90, and that's going to be a beautiful breakdown, which is sitting about more so about $1 or so. And that's going to be something that's going to be very telling tomorrow. So if we get a morning bounce, particularly off of Apple here, I would likely look to see if we can pretty much hold under 166, under 169 here particularly. If we hold under 169, that may end up being your spot to pretty much go short on this and take it right into the gap fill. All right. I know you can't chart ape, but what's your opinion on it as a whole? El Lobo, what's going on? Renee, what's going on? Um, I don't think there's any life that's pretty much left on AMC. I saw it this morning. I dropped pretty much looking at the chart on Twitter. Pretty on not on Twitter, on TikTok. I dropped pretty much that chart. They had the headline pretty much of course getting that secondary preferred ticker with that ape. They also ended up having someone from Regal Cinemas. They ended up dropping basically a statement saying that AMC was flirting with bankruptcy here. There's nothing here that says that I particularly want to be a part of it. I'll be honest with you. It's pretty much all broken the entire uptrend that is. And if I want to say if there's any kind of meaningful support that it should come into, it's sitting right around this, I want to say $9 flat area. 9.909 is that key level, I would say in particular. But I don't think you get a meaningful bounce just yet. If you're kind of looking for that immediate reaction, maybe tomorrow or so, I think you wait for it to come down to that 909 spot, and then you look to see if the shorts pretty much can get squeezed out of this, and then they cause a pretty much a more meaningful reversal out of this. But 909 pretty much seems like a lock here. You're basically going to be retesting your massive breakout spot dating back to May 10th of last year, and I think that's the spot where you're going to look again, see if you get that reversal, see if pretty much the buyers step in on the entire rumor of that whole bankruptcy case, and maybe it ends up causing another short squeeze down the road. But just buying off support, I think that's pretty much the key thing I would say is buying off that support of 909 is probably the best case scenario I could tell you, rather than just catching a knife right where it is. All right. So other than that, I was watching Walmart. I think I saw some pretty much some puts coming out on Walmart. That kind of caught my attention as well, and that's what I was gonna be looking at as well. Going into tomorrow, we had the nice little breakdown. I saw the puts coming in for 135 puts, And once I saw the 135 puts coming in, I had this anchor view up that was sitting right at this basically that 135 spot. It was right around 136 half when I saw the flow coming in. But you're basically sitting at this little support level of that uptrend, that overall uptrend before you had the strong gap up off of the earnings. So you've basically retraced, if not almost all of the earnings here that we've had, those earning gains. I'm gonna look to see if we can pretty much hold right around this 134 half. You likely will get a wick down towards that entire gap fill that's sitting at that 131.36 spot. I take that back. 133.57 is where you're going to wick down towards. And we'll look to see if we get a meaningful reversal right back over 135, over that anchor VWAP, to see if the value play, quote unquote value play, can pretty much give itself a turnaround in spite of the market likely giving us a little more weakness. All right. So I'll keep an eye on this one more so just to see, obviously, the support spot and also a potential value play that's going to be a turnaround, possibly either tomorrow or Wednesday for us. All right, so that'll be on my radar. Those of you that pretty much saw, we had Boeing cloud alert go off. That was a pretty much a bearish cloud alert that went off. You could pretty much see I was looking at it. Once I saw it, we basically gapped down below my anchored VWAP. That kind of just told me the telling story that we're pretty much coming down to my next anchored VWAP here that's sitting. Once you end up breaking that 159 half, that was pretty much the key. Once I saw the cloud alert, I was like, okay, maybe it ends up taking a day or so to pretty much play out. And then so I'm gonna look for this one. We'll look to see if we can pretty much break right under that 157 spot. We crack under 157, we're likely coming down towards 154.27. And Boeing seems like if the market's gonna die, continuing to die rather, I don't see why Boeing is not gonna be one that's gonna take a major part in pretty much that entire downfall. All right. So that's pretty much again what I'm looking at. I pretty much started off the segment talking about the bonds. I pretty much told you we had the 10-year bond yield right back over that 3% mark. That's something that I think is very telling right now. We'll see if how much this continues to pretty much escalate, but I think this is very key right now in terms of this overall market downtrend. Keep an eye on the bond yield early tomorrow morning. See how it pretty much responds if we continue to get continuation to the upside on this, and then also watching the Dixie, the dollar, and see if the dollar continues to surge. And so that's pretty much your keys of what you want to look at. I mean, I sentiment wise, I could say that it looks like we're still going down again tomorrow. I think that's pretty much the bottom line. That's why I say, in terms of levels, it's more so the daily levels that you're watching on a lot of these names, because a lot of these names are just continuing to bleed out and they're going right into major daily key support levels on this entire overall. All right. So other than that, though, I don't think there's much to pretty much else talk about. I don't think that anyone actually has any particular tickers to pretty much actually chart out. So I will pretty much conclude there. Tune into Sig and Dapper for their class that's going to be starting shortly. I know they're going to be talking about the new indicators. That's pretty much a discussion that they're going to be walking you through. So tune into that. Other than that, though, appreciate you guys.